Hello, everyone. Hope you guys are having a wonderful day, making some really good trades. Hope you guys had some happy holidays, time, relaxing with the family. And this is going to be our second economic outlook episode with our head trader, Alex, once again here in the chat.
How's it
Hi.
going, guys? Merry Christmas. Happy New Year.
All right,
All that good
Alex.
stuff.
How are you doing? Did you have a good Christmas?
Yeah, this Christmas was good, man. Did a little traveling. Got together with some family. I leave tomorrow for that traveling I was talking about.
Yes.
So, sorry about being late, guys. We did our Christmas.
It is the holidays, so
Yeah,
it's understandable. But here we are, ready to give you guys some A1 analysis on the market, and let's get into it. We can see that. We're gonna do the recap from last week, but right now we could definitely see that the market's making a new all-time high.
Yeah, what a pump from last Monday.
Yeah.
Started down like crazy and then just right back up.
Christmas
New market highs.
Christmas rally on Friday, and on Monday open today. It's at 40. The SPY is at 47.75, a new all-time
putting
high.
up record high.
So
Everybody looking good except for the Russell, man. Russell's still kind of hurting. Definitely showing the most weakness
Yeah.
in Texas.
I had a nice trade on the Russell. I opened it at 21.41, and then I wrote it up to around 22.25, and then closed it, and then now we're at 22.54. Should have just held it, but I don't really feel confident holding that trade right now.
Well, listen, everything's looking kind of sketch right now.
Yeah.
I mean, as we go ahead with like the inflation talks, and as like I don't know if you guys follow U.S. news, U.S. politics, but it seems like the news is kind of turning on Biden and Biden's plan with inflation.
Yeah.
He had something like 15 points down, which is like it's like the worst president's backing up of the people.
I think
like
Biden
Jimmy Carter or whatever.
I think
I was
Biden
like,
has the worst approval ratings, right?
Yeah,
In U.S.
exactly,
in U.S. history, he's
Well,
got
I mean,
the
they got-
lowest one.
Yeah, he's an old man, man. There's nothing left to him.
They call him Sleepy.
I feel bad for him. It's not his fault. Sleepy Joe.
Yeah.
Did you see the video of him? Like you guys know Beavis and Butthead. You know when he like puts the shirt over your head and he turns to Cornholio?
Yeah.
Did you see the video where he's doing that in an interview?
No. No, I didn't see that. Well, I'm
Hilarious, man.
gonna have to look it up. But yeah, it's not looking too good. And they call him Sleepy Joe. He falls asleep at the podium. Forgets what he has to say.
Yeah.
But
last week we also had that PCI number come out,
yeah, let's go take a look at that right now.
which
Just
is
pull
I
that
don't
up.
like.
So
It's the most manipulated metric they have. Like
So
it's worse than
yeah.
the CPI.
So the the personal consumption expenditure index is probably the Fed's favorite one to state inflation, because it's the one that's the most understated, right?
Yeah.
So the PCE forecast was for 5.5%, and the previous one for the last month was 5.1%, but what we reported was 5.7. So we overshot 5.5%. We're actually higher at 5.7. So the rigged
And
PCE and their CPI
keep in
isn't
mind
working.
that's a rigged metric. Like,
Yeah.
because when you hear on the news they compare our numbers now to the numbers back in the 80s when we had the highest inflation, and you got to realize that those metrics were a lot more honest than what we have now. Like the CPI is completely different than when we had then, and then we still had comparable numbers.
Yeah.
You know what I mean? So they were sitting at what, like 7? We're sitting at like 8 right now.
Yeah. No, we're
And if you think of we're sitting at 8 with high manipulation, we're probably really sitting at 15.
I know.
And
They
it's
should-
crazy because back then, when they polled to see how many people actually care for inflation, it was some numbers like 74%, right?
Yeah.
And now we're sitting at 84%. Like the poll went out last week,
Yeah.
and it's 84% of people care about inflation, and yet look what's being done. They're still trying to taper. They're not being aggressive enough. And even if they were to go aggressive, I don't think that they realize the numbers they have, the interest rates they have to raise, because they have faulty data. consumer price index is faulty data. If they try to mathematically calculate how much they need to raise their rates, it's not going to work because those rates are higher than what we can see.
It's actually funny too because they should just call it, instead of calling it the CPI, they should call it the CP lie, because they just lie about everything, right? So there's no real point in reporting anything. But so the thing is, like you said, back in like the 1970s, 1980s, when inflation was super high and the public, you said 74% of the public cared about it. Well, the public reacted into the market by purchasing gold, right? Scarce assets were rising extremely fast because of the high inflation numbers. Now, the funny thing is today, inflation is worse than the 1970s, 1980s, but it's obviously being understated by the CPI and the PCE and all the other metrics, but no one's purchasing gold. The whole market believes the Fed, like, they got it under control. They can do whatever, like they can do the same thing in the 1970s. They're gonna raise the rates to fight inflation, right? They're gonna give us a positive yield on our interest rate. If inflation's at like 6%, then they're gonna have to raise it to 9% to fight inflation. They're gonna have to raise their rates to 12%. When in the last 20, 30 years, where have you ever seen the interest rate above 2%? Like it's never been. It's almost at like extreme all-time lows.
2% the target. Well,
like, 2% inflation is the target, but then they would give you 1% interest rate. Be like, see, you're only losing 1%. Well, why are we losing in the first place? why am I losing money every year due to your bad monetary policies? It's
the
very
PCE,
funny.
the most rigged metric, right, is still double and a little bit more than our target. So they can't even get their rigged system on their target amount.
Yeah, it's funny. It's very funny. It's like if the mob, like Peter Schiff says, it's like if the mob did a report on crime, they would say there's no crime because they have a huge bias. There's like, why would they report crime? If they report that there's high crime numbers, then they would have to issue more police officers, which causes them more problems. So obviously the government is gonna say inflation's not a problem. It's only at 5% or 6%.
You think that investors have a little bit of fear in gold after what happened after the 80s? I think into the 90s, if I'm not mistaken, when people started dumping into gold because of the high inflation, right? Like they believed in gold, but then they pumped gold too high.
Yeah. Well, I mean, so it creates its own little bubble.
They created their own little bubble, and then when that crashed, they were...
I'm gonna go take a look at it right now. So let's go take a look at the 19.
So the inflation came in, people bought gold. You can see it spiked up, and then it fell really sharply.
Gold had like a massive rally from like $42 all the way to like 915. So like 2,000% gain. It's crazy. And then, obviously what crashed down a lot from there, from like 800, it fell down 67%, right? Because, once an asset gets overvalued, then the bubble pops and everything sells off because they decide to raise the rates like crazy to fight it. But this is not what's happening. I mean, this, in my opinion, this is like the calm before the storm, right? I think we're gonna see a huge rise in gold because the Fed's not gonna be able to fight inflation. It's just so undervalued right now. And in the short term, sorry, what's up?
What's your opinion on gold being the inflation hedge, and then a lot of people talk about Bitcoin being the inflation hedge?
I think they can be both inflation hedge. I don't think you have to pick one or the other. I think one is obviously more speculative than the other, and gold is obviously the safer bet. But if you guys want to speculate a little bit more, because you could just tell by the volatility, right? You don't see gold making these big moves in one day, but Bitcoin has, Bitcoin's had an amazing year. It's gone from, let's take a look here. Sorry, I'm getting on the wrong chart. Bitcoin's gone from like the mid 9,000, 6,000, all the way to what are we at today? 51,000, right? It's had a huge run up, almost 700% to its peak, depending on where you bought. Right, if you obviously bought at the bottom here during the March lows, you would have done even better. But Gold's also had this massive run up as well. Gold's gone from, let's take a look here, from 1,000 here to almost to 2,000. So it's not 1,000% gain, but it's still 76%. Am I on the right chart here? This is the March lows. No, this is August.
I think
gotta go further back.
The problem I see with Bitcoin being an inflation hedge like people want is that there's too much correlation and relationship between Bitcoin and large indexes, specifically the Nasdaq. Like they're almost linked. So if Bitcoin is following the movement of the Nasdaq, like how is it supposed to be used as an inflation hedge?
That's a
It would have to be a mirror. It would have to be a mirror relationship instead of like a parallel relation. You get what I'm saying?
I know what you're saying. So the fundamentals of Bitcoin, right? It's scarce. It's 21 million fixed, and it can't be corrupted or manipulated. I mean, I guess it could be a little bit manipulated because of people who own a lot of it can push the price.
Yep.
But
we saw that this Christmas.
Yeah, this Christmas we've seen a lot of
a couple Bitcoin whales trying to give a little Christmas pump there.
Yeah, we're getting a little bit of a Christmas pump. Get everybody in a good mood right now, but
yeah.
The thing is about the risk of it is that it could, you have these massive drops, right? That's the risk asset part, right? You have these big moves down, 40% down, right? That's not a small move. That's a pretty significant move for a stock, for anything. 40% down is a lot, and that's where some
100%.
people lose the faith in it and say that's not a risk-free asset. That's not a safe haven asset. That's a speculative asset. So the fundamentals make it like a inflation hedge, but the way the price action, the way it trades, is definitely the behavior of it is definitely speculative for the time being. But I believe
and that's what we get into, guys, is that it depends what kind of if you guys are here, you're traders, and we always follow TA.
I hope
we follow what
traders.
The chart tells us. We don't follow what fundamentals tell us.
Yeah,
and that's been working for us this year.
Yeah, it's been working very well. And right now, I think gold is in a bit of a consolidation phase. I think gold could be just forming this very big, macro bull flag, I guess you could say. Like gold is just going to maybe trade down, even it could possibly even break out, but we could see gold had a big run up from 1,000. Now it's just chilling. It peaked at 2,085 and it's all downhill from there. Now we're trading sideways, so I believe I want to bet on $100 right now. The inflation numbers next month. So sorry, they're going to report in January, but it's going to be for the month of December. The December numbers are going to be even worse. They're going to be even higher.
100%.
100%.
I think we're building up. When I look at all the index charts, I think we're building up into something really big.
Yeah.
Really big. Next. So for people that don't know, I'm a cyclical pattern trader, and also I put in kind of candlestick pattern into that. I don't use many indicators. I just look at a lot of charts. So Mick, if you want to pull up some of those charts I sent you there, we'll take a look at.
We'll take a look at them.
Let me give me T2122.
T2122. That one right there.
Yeah, that's the 4-week new high, new low ratio. And
Okay.
pretty much what this tells you is where we are as far as a very short-term bullish and bearish reversal zones. And when we sit in the middle, it can be anything.
It could be anything.
So as long as we're not into those green line sectors at the top and bottom, it could be anything. So right now, as we push new highs, right, we're pulling up on a bearish reversal zone, obviously, because that's the way that candlesticks work.
That's how it works.
Yeah, that's how it works. We go up, we must come down.
Yeah.
But we still have a little bit of room to go up. So I don't know if the rest of this week is going to keep pumping for new highs, especially after all the spending at Christmas and all these reports coming out. They're going to be pretty positive. But if we look at other charts, right, let's give me T2108. This chart shows a percentage of stocks over their 40-day moving average, right? It's we're only sitting at 35%. So 35% of charts are over their 40-day moving average. That's terrible
It's really
for
bad.
indexes that are showing that we're pushing all-time highs
I feel
in the
like
market.
it's the big players that are just pushing up these indexes, especially the SPY. It's just five major companies are composed of 25% of the index.
One,
Or is it
100%.
is it
But
more
it's
now?
just
30%.
yeah, that's divergence. That's clearly showing a bubble. And if you go to T2107, which is our 200, it's the same thing, but it stocks over their 200-day moving average.
Okay.
We're only 39%. We're doing terrible, right? Like the economy is not doing well at all.
No. So
And
yeah.
if we look at our absolute market breadth T2101, again, this chart gives me a lot of fear because we're pushing down as we hit market highs. It should be the opposite, right?
So what does
And
this say? What is this? What is this chart say?
I use my absolute market breadth kind of like I use the VIX. It just kind of shows me the fear in the market.
Okay.
And it has to, if I don't see, like if it was pushing new highs as we make new highs, it's a positive sign.
Okay.
But it's showing me divergence, like the opposite of what's
it's pushing
supposed to
down.
happen. Yeah, something's clearly wrong.
So it's like if the market was going up, but investors were losing confidence into the market
Yeah,
as the market pushes up, and it's pushing up today.
Yeah, and so I see things like that, and I see it's bearish signals to me, huge bearish signals coming into 2022. And then we have things like we're gonna have to put these rates up at some time, and I think that can be a catalyst to a financial crisis. So my theory on what's gonna happen, like timing wise, in the SPY for the next, let's say, out to March, is I think that we're gonna push new highs, we're gonna come down, test our supports, come back up into the beginning of February, and then late February, early March, we're going hard down, hard down.
Hard or slow bleed?
No. We're gonna fall like we're falling out the window.
Alex is very optimistic about the market. Yeah. There's lots of optimism.
No, can't be optimistic about this, man. So, this is huge numbers I'm seeing here.
Yeah, so I kind of agree. Like I'm in the same boat as Alex. I've been short since a while. I think we've both been short for a while, but we could see that we have this major trend line right here for the SPY.
I think for the SPY, for that March correction I'm talking about, I can see us getting to like a 425.05 kind of number. And again, that's going off like a 9-week and a 26-week cycle that are converging on that time. So it's like a big negative pressure coming in.
So yeah, it's
not looking great. I don't think we're gonna see big gold movement until then. I think gold is still, because people are now realizing that inflation is a thing.
I mean, there's a bit, right? A little bit.
They're gonna start trickling into gold.
Yeah.
So we're going to see some upward movement from gold, or maybe some consolidation channel movement from gold.
Yeah.
And it's not going to be till later into February that we're going to get people to FOMO in, being like, oh shit, this is a real problem.
What are we going to do? Buy more gold?
Buy gold, short some things, buy some things at the bottom.
People are not a strong believer in gold right now. But once the party gets started, once it's too late and everybody wants to buy it, then you're too late.
I'll be interested in what happens with Bitcoin when that happens. Does it follow?
So I think if you say like the initial market sell-off happens, then we are going to drop. I think Bitcoin is going to drop.
Oh, 100%.
Fast
everything
and
drops.
hard.
Everything drops when people
Everything drops. Even
selling.
Gold will drop because everybody's selling. Actually, gold might just be there for a transfer. So there's when one thing goes down, another thing goes up, right? So when the entire market tries to sell off and get into inflation hedges and scarce assets and safe havens, then gold and silver might spike up towards the upside.
Well, that's what I'm interested to see with Bitcoin is when that exit of cash flow happens out of the market. Where does it go? I know some of it's going to land in gold because there's a lot of traditional investors out there. But I'm interested to see what the new investors are going to do with Bitcoin. If it can break its pattern of being connected to the indexes and actually use itself as its own hold of value. You know what I mean?
No, I know what you mean.
And hopefully that brings some stability to Bitcoin. I mean, I know as traders we all love this volatility. It's how we make our money. But I just mean like holding a price level that is reasonable for a longer time frame.
When Bitcoin does correct, and if it does, I mean, I'm not saying we're going to zero, but if we have a big correction, I would really want to see it hold the previous all-time high of 2017, which is set at $19,935.
You think it could be that big of a correction?
That's not that big. It could be much worse, actually.
Well, yeah, it could be much worse.
Like, that is only a 60% correction. And when there's these big bear markets, like back in 2017, like when Bitcoin peaked at 19,000, this thing corrected down 84%. So I think it could get pretty bad.
Yeah,
But like
yeah,
I think we're gonna have a good chance of holding 19,900. And that would be a great buy opportunity. We could see that the hash ribbons, where are they? This is a long-term indicator to tell you if Bitcoin's going to capitulate and rise soon, and gives you good buy entry. So we can see right here, ever since I bought at this blue buy right here on the daily candle, and that's where the hash ribbons crossed. I'm still up 14% right here, right? But this one was probably the best one. Ever since bought from this blue dot at 18,000, I've been up 240%. Obviously, you sell some along the way, you take some profits, but that's just on the spot, right? On the spot market, no leverage. You add leverage to it, you're rich.
Did you see any of the Chinese real estate collapse that's going on right now?
The Evergrande market.
Yeah.
The Evergrande. Where's my Evergrande? I put it somewhere in here, but I lost it. I think I may have removed it just because I think it was going back. What's it Evergrande? It's on the Chinese market.
Third one.
This one, China Evergrande Group, OTC. Oh wow, look at that, 20 cents on the dollar. Oh, I'm looking at it on the wrong chart. Let me just put
China's looking rough right now. I got a Baba trade in, and it's not looking hot.
So Chinese stocks are pretty difficult right now. They're getting punished.
Yeah, they're getting
for no good reason, in my opinion. I think they're way undervalued compared to what U.S. stocks are at. I think Chinese stocks are looking much more delicious.
Well, they had their bubble pop, right?
Yeah.
We're still pumping it up full of air.
Yeah, I don't know.
Although I say that, and fucking BBB, Biden's signature program there looks pretty weak. Like, I don't think it's gonna go through.
Oh, his Build Back Better plan?
Yeah.
It's shot in the water. What's his name?
Yeah,
the senator. Senator canceled it.
Yeah.
I forget his name.
Bad.
Which is really bad. That's what pushed the markets down the other day.
Well, yeah. Now we have people that like the saving rate is nothing. People have zero savings left because they spent it all, right? Everybody's looking really weak as far as economic power, and then now they're not getting the stimulus they were expecting to get, which we're gonna see a lot of falters on a lot of mortgages are gonna go down. This interest rate's gonna go up. It's gonna fuck a lot of people.
Yeah.
Be interested to see how far this crashes, but to be honest, we pumped this thing so big that I think we're looking at depression levels, not recession levels. We're gonna be really
they have kicked the can so far down the road that when this thing does pop and it gets out of hand and they lose control, right now we're all in the car with the Fed on this, you know, and nobody's got their seatbelts on, and they got their foot on the inflation accelerator, right? They're saying they're easing off, right? They're easing off on the accelerator. They said they're going to start braking by applying interest rates. They're not going to do that at all. If they do that, they're going to hit the handbrake and they're going to kill everyone in the car. They're going to kill us all. You know, it's going to screw everything up. You can't do that. And I think that they're never going to admit to the problem that they've caused and built up. I think they're just going to let inflation get on a roll. You know, it's going to get out of control. It's going to get to 30% maybe if it keeps going at this rate. And they're going to, real inflation is probably going to be, it's at 15%, 10% now in my opinion. But if it gets to like 20, 30% and people start to the cost of living is going to be so high, and then they won't be able to raise the rates. They're just going to say inflation's at 9% max. It's going to come down next year. 2
Yeah.
point. Right now they got a target for 2.6%. They expect it to come down next year to 2.6%. Now that we're at 6.8 or 7.2, depending on which metric you use. But it's not gonna come down.
I think 2022, 2023, these are going to be some bear years. I don't see how they could.
More bullish.
Yeah, I don't see how we could be bullish in this. Have economic prosperity.
We're gonna have a currency crisis, and it's gonna be a really big problem.
Yeah.
That's
Yeah,
why.
dollar
That's why
is definitely
people are
gonna fall. US
speculating
dollar,
as
Canadian
well.
dollar.
Yeah, that's why
Anybody
people.
that's freaking like crazy.
And then we also have so COVID cases on the rise, right? This is going to be a contributing factor to inflation as there's going to be more supply chain problems, right? Now, I don't know, the Omicron virus is probably not as bad as everyone thinks,
Well,
but I
so
don't
we
know.
got 3 studies out right now
Okay.
that say Omicron isn't as deadly
Okay.
as the other 2 crazy ones,
Okay.
right?
Okay.
So I think Omicron could be the end of COVID.
Could be the end.
If it takes over, like if Omicron takes over and gives immunity to all the viruses, you get what I'm saying? It gives you natural immunity, which is shown to be like 8 times better than vaccinated immunity. Not to shit on vaccinated people. I'm vaccinated myself. Mickey had COVID and is vaccinated. He's double protected. This guy's got 2 Kevlar vests on. But if it's more transmissible, right? And has a
Sorry, you cut out. I think you're frozen.
lower death rate and hospitalization rate, that means people get good.
Okay, yeah, you're okay now. It just bugged a little bit.
I think if everybody's getting the disease because Omicron is more contagious, we're not getting the negatives because it's not as deadly.
Yeah.
Then we have more people at a faster rate getting naturally immunized, and it could burn itself out, because right now, Canada, where I live, 10,000 cases a day. We're skyrocketing here. But our hospitals aren't getting overrun like we kind of expected. So this, I think if politics smarten up, politicians smarten up, and are willing to, I say this very lightly, willing to relinquish their power, which is the government, so they're not going to.
No.
We could end it here if we play it smartly. But the problem is we end it here, and then we fall into a giant recession because the way that we've played our cards economically. So it's might be the end of COVID, but it doesn't look like we're out of the water yet.
The whole thing that I don't understand is now we have all these studies saying it's like a common cold. It's not bad, right? We got the media portraying it as like it's you got to go get your test kits. You need to go get tested. If you have it, you could die, right? And then the government, like the provincial ones, they're putting everyone in lockdown. They're putting more restrictions on small businesses, and this is gonna affect supply chain constraints, which is gonna affect rising prices because now you have less goods to sell and more demand, still just as much demand. And if they start up new government programs, which they already have one in place, but it hasn't been in effect yet because there's no lockdowns in our province. But
so what you're saying is that we're making things expensive. We're making things more expensive, and at the same time devaluing our dollar.
Yeah.
Which makes things even more expensive.
But the dollar strength, the dollar strength index is on the rise.
For now.
It's go time. It's go time. For now, yeah. We can see the DXY is actually up today. Or actually it's been trending sideways. It had a nice spike up to almost 97, I think.
Yeah, they were at 97, then we hit 95. Hold on, I'm just looking at my notes here.
We're in a bit of a consolidation phase right now. Maybe another move to the upside. Maybe we're gonna get back up to 100. Who knows? Who knows how far they can push this thing?
What are we sitting at right now? 96.8.
96.08.
Yeah, I had a note in my. I took a note down. I think my target was 95.5 ish. For the next short term.
I don't know. I don't have much confidence in money printing. I don't know. It's funny because Jerome Powell, the chairman of the Federal Reserve, this guy must have studied at least economics 101, and he got on the stand one time last year. He said, uh, printing money doesn't affect inflation, or he said something like that. The amount of money we print won't have any effect on the value of the dollar. I was like, what? That's crazy. That's the craziest thing I've heard. I was like, that's the whole principle of currencies being devalued, is you print too much money. That's like the foundations of like inflation and economics. Are you crazy? What is he trying to spin off now? And it's funny because like the past 10 years, inflation was like the boogeyman, and it's bad, and we need to keep it low. But now that it's a problem and it's out of their control, Janet Yellen, the Secretary Treasurer of the United States, gets on the stand and goes, "Inflation is good for the economy. It is good. We need more inflation."
No.
But you know what? That's a promise that a promise that the Fed's gonna keep. Is that inflation is gonna be up.
It's the only lie they haven't told us.
That's one thing that they've said. It's the truth. It's gonna go up. Inflation is gonna go up.
All right, so that's our market view. You got any stock picks? Anything that looking nice right now?
I think I have a couple right here. Newmont Mining trending sideways at $76. I picked it up at 67. Big position there. It's actually looking quite nice. Let me go take a look at my chart right now. Newmont Mining sitting at 76. I picked it up here on this drop down to 67 right here. Right here, perfect bounce right on the trend line. Now we're up back here to 76. I'm up.
I love your really technical fucking lines here.
You see that one? That's my
prediction.
From here we go up, zigzag up, and then it's
an accurate Fibonacci retracements. Fucking
yeah, it's delicious. It's perfect. No, but it is holding major trend lines right here. We can see, we got a touch point here, touch point there, second touch point, rise up to $91, and then from there rejected all the way down, back to these two touch points. We got another one here and another one there, and perfect. We're rising up right now. We also got that dividend payment. It's a nice dividend stock to hold too. It doesn't pay much, but it's better than nothing, right? And you got the capital gains to consider. So I'm up 70% on that position. KL, me and Alex got into KL at like $40. We closed our position around 48. Then we got back in on this dip, I think, and now we're just sitting. I think my entry is at 47 right here. So we're still up on a good bit right here. I think we're up about 10% on that trade.
Yep.
And then
I've been sitting on a nice short there. I shorted EQB Equitable Group.
Equitable Group right here.
Almost mid-November.
Yeah, mid-November. That would have been a good time to short too, because I
see we're coming. I see we're coming up right now, but I'm thinking that this is just we're just testing.
Your bank can't afford to pay those interests. Those interest
that's
payments
the problem.
is
and
too
I think
much.
they're losing popularity right now because if you have your savings rate go down and people don't have more money in their and that's what EQ Bank is. It's just savings accounts and mortgages. That's all they do.
Yeah, that's
if people have no money to save, your earnings aren't going to be good.
And something that was scaring me the other day was like I was talking about this at Christmas with a couple of my family members. Is they were talking about the housing market and how it's so hot right now. Like my brother was telling me one of his friends purchased a home, and they purchased it at $300,000, and they're like, oh, it doesn't matter if we overpay for it now because someone else is gonna overpay for it later. I'm like, that's the whole principle of how the 2008 bubble worked. Like, people were just overpaying for houses, expecting someone else to overpay for it later. I was like,
well, you got that, and then you add on top of that, you got people, and the way that we do our lending here is it's all based on ratios, so your debt ratio and everything. But we have people buying houses that are, as far as building material costs, they might be 3-4 times more than what it actually costs to build the house for resources. And so you have a house that's maybe 80 grand to build and it's selling for $400,000, right? And those people are holding a $400,000 mortgage. If those rates go from 1.3, what they were at a couple months ago, to if the Fed is serious about stopping inflation, let's say 10%, 14%,
Mm-hmm.
they're not going to be able to afford their mortgage. That is a huge jump in payments.
They can't do that to the rates.
And we're gonna see a lot of mortgage failures.
Yeah.
And what happened in 2008?
So right now, a lot of people are stretched beyond their limits for mortgages. They can barely afford. You got people getting a $800,000 mortgage on dual income, and with rates at this low, they can maybe make like they're stress testing them to the max. They could probably just get the mortgage and then that's it. That's enough. If someone loses their job, we're done. We can't afford the mortgage anymore.
Well, that's what I mean.
There's not a lot of
yeah.
So there's not a lot of
yeah.
Go ahead.
Sorry,
go ahead.
No,
You go ahead. I want to see. I want.
You.
Okay, fine. So the thing is, like, there's not a lot of variable rates like in '08. It's very low compared to '08, right? But there's a lot of fixed rates. But what there's a lot of is a lot of revolving debt, home equity lines of credit, regular lines of credit, right? You got credit cards, all these short-term loans. Those are all affected by rising rates. So if you raise the rates, people won't be able to pay their mortgage and their short-term debt at the same time. So
well, we call it short-term debt, but I don't think like the way that our society uses debt, specifically credit lines, they think of them as long-term debt because they don't realize the interest that's tacked on. They just pay whatever the minimum is and then don't think about it. You're only paying the interest. You're never paying your actual principal amount. And so you give 3-4 times higher credit card rates.
You can't afford your minimum
They're
payment
not even going to be able to make the minimum. They're not going to be. They can't make the interest payment, let alone be able to pay it off. Because some people have $20,000, $30,000, $40,000, $50,000 on credit cards. I don't see how. And if those people have to falter, that's too much to go on the government, as the government is also faltering. The Fed is not going to be able to afford anything.
It's very interesting what's going to happen in 2022, isn't it? It's going to be a spicy year for the market.
It's going to be, you guys better have a little I saw somebody in the chat there, they were talking about, they got all their money in cash right now because when the 90% drop comes, they're gonna buy stuff at the bottom.
Yeah, but what happens if you're
kind of on the same boat, Like, I'm gonna be trading downward to make some money going to the floor, but it's scary. It's scary to think how big we've made this thing.
Well, every time the Fed releases a new CPI number that's higher, I just add more. I just convert more cash to gold. I just keep less in cash the higher the CPI number goes and the higher they report it, and then the more they say that don't worry, it's gonna go down. Yeah, that's okay. I'll buy gold. You keep saying that, but I'm gonna keep buying gold and scarce assets because I don't believe a thing you're saying.
Well, that's the problem with people that put all their money into their houses. They don't have access to those funds to trade them into gold. It doesn't follow the same growth.
And we're talking about the same people who are saying that the financial institutions and mortgage, subprime mortgages were just a small bubble, not big or anything, and it was not to worry about anything. And then the '08 crisis happens, and then Bear Stearns collapsed, and financial institutions were imploding, and they had to step in and start QE and bail them all out, or else the whole country would have collapsed.
Yeah.
Right. This is the same people. So you guys.
I'm gonna end this on. I want everybody that's listening to this be very, very safe going into 2022. We don't know what's gonna happen, but everything we look at is pointing negatively. There's nothing that gives me hope into the market going into 2022, 2023. So make sure that you can afford 10% more on your mortgage. Make sure you can afford
10%.
Yeah, well, I mean, that's an honest. That's how high they would have to bring the interest rates to be able to cope with what's going on.
They won't do that.
They won't, because it causes economic.
I think they would have a better chance of just changing the CPI and saying, "Yep, there's no inflation," and then just lying about.
I think it's going to be so bad with our debtors that we might go to war. They might be.
That's the problem too, huh? There's a lot of civil unrest, and if we're a debtor nation, we're not a creditor nation. We owe
Yep.
so much money to Japan and all these other countries that
Yep.
if we default on this, they're gonna be pissed. They're not gonna sell.
Oh,
They're not gonna sell us anything. And if we get pissed because they're not selling us anything anymore because we just defaulted on all our debt. And we say like
there goes our
we
dollar
need
value.
you to sell us stuff or else we're gonna die because we're a consumer country. We're not a producing country. We don't produce
I
anything.
think I think it could be so bad, right? That we convert the trade like currency
Mm,
to not USD.
that's lovely.
I think it's gonna move to somebody else's
So
denomination.
there needs to be a world reserve currency, right? And everyone's using the U.S. dollar, so it's gonna be a really big problem. Because if everyone's U.S. dollars are gonna start to be worthless, then everyone's gonna be pissed off. they're gonna
What-
and they're gonna
by
buy
the way,
something
what
else.
was that joke I made like 2 years ago?
What is it? What is
It was,
it?
yeah, we're all gonna be fucking holding yen in our bank accounts.
Oh yeah, yens. You're gonna be holding yens
Yeah,
instead
yeah.
of what is it? The digital yen, the digital yuan instead of holding U.S. dollars.
Yep.
Oh God, what a
The
time
day
that
will
would
come.
be.
The day will come.
Okay. Anyways, guys, we're gonna end it here. The podcasts are only gonna get better from now. I got a new mic, got a new computer build coming. I'm gonna post that video up. And anything you want to say, Alex?
That's it. You guys have a wonderful holidays. Keep safe and keep trading.
Okay. All right. We'll catch you guys later. Peace.